All right. Hello, everyone. Mark here, and welcome to another Green Bridge Investing market analysis. I know I'm running a little bit behind today. Sorry about that. But in this session, I want to run through Bitcoin, the major markets, and select stocks. I hope you have some stocks for me to check out. I would like to try to keep this around 15 to 20 minutes if possible, because we have the podcast today at 4:05 p.m. Eastern time, which you can come back to the channel here and you can check that out. Okay, so with that being said, let's take a look at my favorite boring slide. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, as we know, today is Monday. So there's Bitcoin, but you know what we have to do on Mondays, right? For those of you that have been watching my videos, you know the routine. We got to take a look at this. This is very important. And the reason is we want to make sure that we are aware of all the economic events that are scheduled for the week, especially if we're involved in any Forex pairs. So just taking a quick look at this, what do I see here? Great Britain unemployment rate. That might be a factor for the pound, but this is much more important. Okay, on the 19th, which is tomorrow, the Fed Chairman Powell testifies. If there's any surprises in his speech or anything that the market was not expecting, he can move markets, whether it's a Forex pair, whether it's the stock market, whatever it is. So we want to at least know that the guy is speaking at 10 a.m. Eastern time. So that's very important, especially for day traders, because they're the ones who are going to feel it the most if there's a dramatic move. But this does increase the risk of trades that, if we have any trades tonight or, going into tomorrow, because there can be a surprise. So just something to keep an eye on there. Then we have what? The PC, the Chinese, the bank interest rate decision. Well, this can have an effect, obviously, because China is a big factor in all this. So we have to see how that plays out. Again, you don't have to sit here and watch every news item, but just be prepared. If there's a surprise move in the market, this is where these things can come from. These things can become a catalyst. Okay. Other than that, we have the FOMC minutes on 5/20. I wouldn't worry too much about that. Then we have the Bank of Australia, Governor Lowe speech. I wouldn't worry too much about that unless we're in the Aussie dollar, but we don't have anything in that right now. None of these are really eye-catching here. Jobless claims. And then we got another speech from Powell, Chairman Powell on the 21st. For the U.S., that's important. Again, that can move markets if there are any surprises. It could be a positive surprise. It could be a negative surprise. So just keep this in mind, especially those of you that are trading the Forex pairs that we follow. Okay. And then after that, what else do we have here? I wouldn't worry about the rest of these. Okay. Not that important. So we have a couple of items this week to keep an eye on. Now, so with that being said, let's now take a look at Bitcoin. Again, if you have any questions while I'm doing this, please feel free to ask, and I will address them the best that I can. For those of you that are new, make sure you subscribe to this YouTube channel, because every time I do one of these videos or when we do our podcast, you'll receive a notification from YouTube, an email notification, and you can join in and participate. Okay. Also, we don't share trade ideas on these videos. The trade ideas are sent by text and by email to our subscribers, but I will review trade ideas, after the trade is in effect. I have no problem reviewing them, looking over them or answering questions about them. Okay, so enough talk. Let's get into this. Bitcoin. It's been reluctant to sell off, right? And we're not too surprised about that, but we are reluctant to take a new swing trade. As you know, there's another inside bar over here, which was taken out. The high of that inside bar was 95.90, but we are not going to get long right inside of this resistance zone. We're just not going to do it. The probability of clearing this zone is not that great, number one. So we're taking a lot of risk to to basically hopefully reach a reasonable reward for our first target. Not worth the risk. Just like I explained in my recent TradingView article, it's just like, we'd rather miss the trade and wait for an opportunity that makes more sense. Because in the long run, that is how you generate a positive outcome and a consistent return, not just jumping in just to make money, because you'll never make money that way. So what we're anticipating from Bitcoin is still like that consolidation that we've been talking about, similar to gold, right? Symmetrical triangle. And I've been talking about this, talked about it in my Trading View video. Andrew mentioned this. We're looking for this type of price action, okay, where price will gyrate inside of this triangle. Gold gave us a very good example of that. Of course, gold has broken out and, it's gone further, but we're looking for that type of action out of Bitcoin. The good news about that is these patterns are typically trend continuation patterns. So when you do get a breakout, there's likely a nice move ahead. The hard part, though, is trying to get in before it breaks out, because you could wait for the breakout, try to buy that. You could get caught in a fake out. It's very possible, which those are the low probability, higher risk trades. And then you have the test of the lows of the range, okay, those are the attractive levels for us, especially if we're in a range. So that's what I want to see. The 8,500 or the high 8,000s, that would be a good location for a swing trade long setup. Okay, maybe slightly higher, maybe toward the middle of the range, but we don't want to really, unless we have a nice clean setup, we don't want to buy right in the middle of the range a lot of times, because price action is very random there. We'd prefer the lower part of the range. That's where reward risk is most attractive. Now, if price breaks out of this range, which it can do, and goes slightly lower into the 76.95 support, that's also very attractive for a long. Why? The broader bullish structure will still be intact, defined from the 6,600 low, 3,800 low, and this higher low. That will still be intact. It will also lure a lot of bears who will most likely get squeezed out, and that's the type of trade we like to take when there's a lot of motivation to buy, and bears usually are good motivators to push price higher when they're getting squeezed out. All right, so that's what we're looking for there on Bitcoin. If you have any questions, again, please let me know. If I can't address it here, I will definitely follow up in the chat room. Now, let's take a look at the stock market. Again, we have our podcast today at 4 or 5 p.m. Eastern time, and we're going to cover a lot of this stuff there, plus a couple of stocks, interesting stocks that we're looking at. I mentioned stocks because we recently got out of a lot of our swing trades, during this retrace earlier over the previous week, because we did not want to take the risk that we get the broad pullback. I mean, keep in mind, the higher the market goes, look, we welcome this. This is great. We got this bullish breakout in play right now. And this is great for those that are long stocks. This is also good for those that, stocks are giving you breakout signals and you want to take a small bite and try to rotate that. That's exactly what we've been doing throughout this entire rally. This is not a place to get heavy. This is not a place to take aggressive risks with a lot of size, because the higher we go, the greater the risk of retrace. Now, people don't ever want to hear that because it's just not sexy, but that's the case. So as we get closer and closer to this 9,700, that's going to be a major resistance, number one. And this is also going into a vulnerable area for a failed high. Now, I've been bullish the stock market. I don't trade on opinions. I have no opinions. The market tells me strength. I'm looking for longs, right? It's that simple. Now, but this type of location, though, makes me a little more cautious, because yes, we should break out higher, but there's going to be more vulnerability here. And if I see any type of bearish price action and I'm long something, I'm probably not going to want to be in it, because at some point we're going to have to see a broader pullback. I mean, that's just the way markets work. And we don't know when that point will come, but when it does, right now, this support right here, which is this 83.74, basically 8,400 area, that's the key support, which keeps this trend intact. And we can test it. So that's the ideal place to really start buying into stocks for the longer term. We'll make portfolio management moves at such a level. But my point is, this is not a place for portfolio management unless you're taking profits, because you want to take profits into strength, lock in profits. We've been having people asking questions about locking in profits in some of these big winners like Nvidia. We've had a few of them. That's the one just off the top of my head. And Andrew's been like, just stay in, let the winners run. And that's true. You should let the winners run when you have a winner like that, because you're talking about the strongest stocks in the strongest index, and your chances of them going higher are good, right? But my thing is always too, if you feel like, hey, maybe I should take a little off the table, take a small increment off. If you have 100 shares, what's wrong with locking in 20 shares? I mean, you're reducing a little bit of risk, right? You're locking a little profit near highs, and if it keeps going higher, you're still in. I'm a fan of always taking something off the table, even if it's a tiny amount. Maybe if you're too small, like if you only have 10 shares, should you take off 2 shares? No, in that case, no. But if you have a sizable position and you'd feel more comfortable, it would make you feel more at ease to just take something off the table. There's nothing wrong with that, taking profits, okay? So, but this thing is strong, there's no question. And in theory, this thing should push higher. So we have to see how that goes. Now remember, we have all the economic news. A couple of those news events can turn this thing around this week. So we just have to be prepared for a sell signal, although there's nothing there at the moment. All right. Anyway, so that's what's going on there. If you have any questions, please feel free to ask. Now, the next thing I want to get into here is the DAX. I go over the DAX again, even though it follows these markets. I like to just mention it real quick because we do have a number of people from the Eurozone, and I think it's helpful information for them, okay? And they've also asked to see the DAX a number of times. So here's the DAX. Now, are we surprised? No. Why are we not surprised? Because it follows the US stock market, right? I don't care what the economic situation is in Europe. If the stock market goes higher here, it goes higher there, okay? That's just the way it is. And I don't question it, I just accept it. So we had this attempt at a break of low back here, okay? And now you can see we have this nice vertical candle. So this situation between, what is this? 10,182 and this high of 11,200 basically, that was just a consolidation, okay? And it looks like we're gonna try to break out. Again, this follows the US stock market. So there's a couple of items, along that list of economic events that affect the European, markets. So if you're into this thing, just be aware. If you have European denominated assets, again, just like the US stock markets, don't be afraid to lock in some profits along the way. Although this is strong, high or low, should take out the higher high, it is relatively weak to the US stock market. So if the stock market pulls back, this probably will pull back in a more dramatic way. Where an opportunity can come up is maybe we get a short signal along the way and you want to short the CFD. Okay, fine. But there's no reason to do that yet. Okay, so just keep an eye on that. This thing should follow along and I would anticipate a higher high. Okay, question. It's exactly, Michael, I'm glad you brought that up. We were actually going to talk about that on the podcast today, and I'll bring it up here real quick too, because I wanted to make some points about that. So thanks for bringing that up. So let me jump into oil really quick here. Now oil is one that, we were very interested in some trade ideas. We missed it, okay? But I understand a number of our members got into this and they're long oil. And it's doing very nicely, okay? That's great. It broke through that consolidation. This was a tough trade because anything could have happened here, but now it's doing its thing, right? And obviously the stock market is, doing its thing too. They seem to be moving together, right? You have an improving oil situation, you have improving stock markets. That could be like basically an economic reason for that. Honestly, I don't care about the reason. All I'm interested in is price action, right? So when everyone was saying oil is going to zero and blah, 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 and this and that, we knew that we shouldn't be shorting it. At least we knew that much. But, buying into it was tough and we wanted to see some sort of confirmation. We never got the pullback that we wanted, and now it's on its way. Now, I've had questions before from people asking me, what do you do when you miss out, and how do you deal with that? It's just, don't beat yourself up. We're going to miss moves, right? It's normal. And the great news about that is there's always more moves. So I don't care. I can miss 100 moves. There's going to be another 100, coming soon if I'm just patient enough to wait for those high probability setups, because that's really what matters, is taking setups that make sense in terms of reward risk. And that's what's going to pay you out in the long run. If you just jump into anything like, okay, so we missed a nice move. you're going to miss things like this. If you just jump into anything, what people don't realize is how many of these failed, how many of these faked out, and now you're caught in that fake out. So now you have to lose here, and next thing you know, you lose 30% of your account on just nonsense, on just noise. That's money that could have been invested in high probability setups. Okay, so you have to keep that in mind. So as far as technical for oil, we have this resistance coming up at 28. In fact, I'm going to switch this chart because this is probably not the best chart to use here. I'm going to go over to the WTI USD, which is, no, that's not it. The USD WTI, I think it is. Is that it? Yeah, that's the one. This is the chart that probably most people see. I just have a habit of using that Awanda chart. Okay, so again, we broke this resistance. It's pushing higher. We have this gap up in this area here. What is that? In the 37 area. That can be a resistance as well. What do we want to see to get long? At least a pullback, some sort of continuation pattern, perhaps an inside bar, something where we could measure our risk, and that can turn into an aggressive trade. Okay, so we're still interested in longs. We just have to wait for the right opportunity. Okay, so again, if you have any questions, please ask. By the way, our podcast is at 4 or 5 p.m. Eastern time, which is in about an hour. So I have to set up for that as well. All right, now let's take a quick look at gold. Gold has been very active. Now, just like Bitcoin, we talked about that consolidation pattern that's developing in Bitcoin. And we saw this in gold, okay? Now, gold, of course, you can't chase gold because here's what you have, right? So let me show you the consolidation pattern if you don't see it, right? You have this, okay? You have this, and then you have this right here, okay? That was and we had this pattern took what, like 2 weeks to play out? And this is very tough to trade inside of. If you bought like in the middle of this, you had to take some pain, and pain in gold is like 30 or 40 points. Very easy to get stopped out, very easy to get faked out in something, oh, it's a short. And then you read something somewhere, oh, I'm short in gold or some other nonsense. Meanwhile, gold is not a short. There's no fundamental reason for it to be a short. But even though I don't trade on fundamentals, technically, there's no reason to be short. This thing is just nothing but strong. Okay? So these type of patterns, like I said, are typically trend continuation patterns. So the gold breakout wasn't a surprise, but here's what you can't do. And, if you took the gold breakout, that's one thing, but you have to be careful because, you get these situations. That's an ugly pin bar. So if you're in gold and you have some profit and it closes like this, and then you take out the low, that pin bar, 17, basically 17 and a quarter, that's a sell signal. So what do you do? Well, if you're in a short-term trade, you should probably take your profits, take something off the table because gold can pull back into the middle of this range, which is like 1700 or even the 1690s. Now, that's where I'd be interested in looking for another long, but it may fake out, right? And we have to be careful of that. So I want to see another buy signal in gold, just not at these levels. I'd like to see it at least somewhere inside of this range or the old upper boundary here of this triangle, which is around, what is that, 1715 area? Something like that. So we're going to keep an eye on that. But we're definitely interested in another gold long. So any questions, please feel free to ask. Now, let me jump into what's next. The euro. Andrew almost sent this out today. He this is one of those things that just like he looked away for 2 minutes and then this candle was there. And like I just said earlier, we're not going to catch them all. Especially the euro has been very difficult. We've been talking about this support at basically this 107.5 area. We've been talking about how it's attractive for a long, but the momentum just kept on failing. Okay, 1 minute it was a long, then it turned weak, and then it turned again. And now this is the squeeze. When you see a vertical bar like this, I'm sure we can point to some news and say, oh, that's the reason. But typically there are just too many shorts. Okay. And when you get a vertical candle like this, they're getting squeezed. So do you chase this thing now? No, can't chase this thing. But, we're going to the higher part of the range. If anything, you should be looking at the profit targets. All those previous profit targets that we set up, use those as a reference if you're in this thing. and look to reduce your risk. We're not going to buy chasing into this resistance. This is a range resistance. We're not going to buy into that. That just doesn't make sense in terms of reward risk. So we need to either see a pullback to the lower part of the range, which, don't know if that'll happen, or we need to see a breakout followed by a pullback of some kind before we could take another position in the euro. So I'm pointing that out because, getting into the bad habit of chasing, you may buy it this one time, okay, at 109.30 or whatever, 109.20, and you may make 50 pips or something like that, and like, oh, that worked out, but that's a bad habit, and you don't want to get into those type of bad habits of chasing. Just let it go, and we'll find an opportunity somewhere else. Okay, so let me get to some questions here. All right, so Michael, we're going to take a look at ACB, and then Bella, can you have a quick look at? Okay, sure. There's an open trade. Okay, sure. Right. No problem. So let's take a look at ACB first. And I appreciate you guys participating and coming here with these stocks you'd like to see. So let's start with Aurora Cannabis. So this is the thing. Look at this. I talked about this when I originally got long. Okay, you can actually see I left the order on my chart, right, at 89 cents. That was theoretically, that was back here. Okay, that was back here when this thing, before the reverse split of 12-1. Now, what was my reasoning? For those of you that remember, I said, this is a lottery ticket type of play where out of nowhere, some news will come out and you'll see this thing just go vertical for no reason, right? So we all got into it and it just underperformed and it was just garbage, okay? And we even had people ask me along the way, should we get out? Should we get out? And I'd say, well, I have my stop basically 50 cents lower, and I'm not going to get out because I'm just going to give it to the stop. Well, it never actually got to the stop. Instead, they had their reverse split, and next thing you know, this thing's at 650. And they're like, all right, you know what, this thing's garbage. The reverse split, first of all, was a big turnoff. And, and so we all got out. Next thing you know, the lottery ticket, right? So what do you do in that situation? Well, the point that I want to make about this is, yeah, good question about the euro. I'm not going to answer that. The point about this is, this was what we were looking for, right? Just like Michael pointed out, this was the strategy. We were looking for a lottery ticket, and it came. We just didn't have the patience to deal with this thing anymore, and we stuck this thing out for like a month or two. All right. Now, I don't know if anyone's in this, but if you are, I mean, just let this thing run. I don't know what the news is. I don't care what it is, but this is the idea. So the lesson that I want you to take away from this is if we're in another situation like this where we're playing a lottery ticket type of move, the lesson to be learned is, hey, if you have your stop and your risk is defined, just that's it. Let the market go to your stop or let the game plan play out. Okay, because charts would not have helped us in this situation. A chart is not going to tell you that a move like this is coming. Only inside information will. Okay, and now this thing is like, this huge winner. So that's the lesson there. All right, I hope you find that helpful. We're going to also talk about this on the podcast as well, because you can't beat yourself up over something like this. We played it right. We got out because of some noise, basically, and that's that. So that's why I always say a lot of times it's better to minimize yourself as much as possible from the trade. Okay, the less interference from yourself, the better. Let the market handle it. All right, so Bella, all right, let's take a look at that real quick. And then, yeah, I'm going to get to the euro. But to answer that question real quick on the euro, yeah, stick to those levels because they're still relevant. Those levels are still relevant, okay, for the euro, the targets and the stop and all that stuff. If you're in that, that's great that you're in that. Nice trade. So this one, I believe this is the one that Dave pointed out in his chat room recently. And so here's the thing. I can see what he likes about it. It's pretty clear. You have a nice double bottom. First of all, the stock is pretty inexpensive, right? It's a reasonably priced stock. You're looking at a double bottom off of this 13 area, 14 area, which is nice. You have this consolidation breakout. Yeah, no problem. Followed by this higher low, which occurred over the previous week, right? So this thing is in a position to take out this high of 21. And as long as this structure stays in place, okay, look at the outside bar. Which outside bar are you referring to? You're referring to this red one back here? Or because right now, I mean, you have this bullish candle, which actually cancels out this bearish one pretty much. And then you have this little hesitation, this little noise over here. But the key to this right now are the higher lows. And right now, your trend is being defined by this one right here, which is 1679. So as long as you can just abbreviate that a little bit and say 1650. So as long as you're staying above 1650, this thing is in a position to go higher, right? And your next resistance, by the way, on this thing, based on this chart, is 28 and a quarter, right? So it may not go there like, right away or in the next couple of days, but maybe over the next few weeks, this thing has that kind of potential. So it's definitely a great structure. I like the structure and I like what it's doing. What it should not do is clear that 16 and a quarter area. If it closes below that and goes back into that lower part of the range, that would be a sign of weakness. So that's how you kind of judge this one, all right, if that makes sense. But if it starts pushing these higher levels, don't get unrealistic and think it's going to run all the way back up here, okay? Take your money when you can. When you have a nice push and you have a nice vertical move in one of these things, take some money off the table. It's just a good habit to be in, okay? Right, like ACB. Now, Giancarlo, Euro franc. All right, let me run through that real quick, and then I'm gonna have to. After that, I'm gonna have to go because I have to set up for our podcast. That actually takes me a little while to do. I have to set up for our podcast at 4:05 p.m. Eastern time, and I would love for you to come in there and ask some questions there as well. It's going to be in the same channel. So, on ACB. Okay, yeah, there is actually a delay on the chat. There's like about a minute or a minute and a half delay. By the time I see your message, I'm like a minute and a half ahead of you. Here's that Euro Swiss. I mean, and again, this is a result of the Euro going vertical, right? And the dollar franc underperforming, right? You have that imbalance like that. So Giancarlo's question is targets and potential profits. Well, look, here's the thing. If you're in this, when you see a move like this, it doesn't hurt to lock a little. Just take a little off the table. I don't know how much you have, but let's just say you have 3 micro lots or 3 mini lots. Take one off, right? Just especially if you're more than 1-to-1 reward risk, wherever your risk has been measured. If you're more than 1-to-1, take a little off, right? Never hurts. Now, as far as the next resistance level, the next real relevant resistance level on this thing, you're looking at this level here, which is like 108, 108.09, that area right there. So you have some room to play with here, okay? I would take a little off the table here and then try to let it run until you get some sort of bearish outcome, some sort of sell signal. There's no reason to really, Giancarlo, really, there's no reason to sell this thing right now. You have a vertical candle. I'm just saying it's good to be in the habit of locking in some profits along the way because it's just a good habit. This thing, who knows, it could turn right around and next thing you know, it's back to where you got in. I should have taken my money. Take a little, so that's why reduce risk when you can, a little bit, but there's no reason to sell this thing. So let it run. And we always encourage, let your winners run until there's a reason. I don't see a bearish pin bar. I don't even see a bearish candle. The thing is just getting started. Okay. And as long as the euro stays strong, I mean, this is basically the euro. You're in the euro. It's just against the franc. So, and they move opposite of each other. So as long as the franc stays, dollar franc obviously is going to have to, I believe, go lower, I think, for this thing to keep going. I always get confused with these, but just use the euro as your gauge because the euro is your base currency here. As long as the euro goes higher and it's going higher faster than the franc can appreciate against it, this thing should go higher. So maybe you'll get some additional clues from there, okay? Okay, so yeah, so well, since I'm on the subject of dollar franc, let's take a look at that. All right, and then I'll run through ACB real quick again because I didn't see the outside bar you were talking about. Yeah, I didn't put the right symbol in here. Hold on. Okay, so ignore these horizontal lines. They were from, I have to just clean up my charts. Some of my charts haven't been cleaned up here. So, all right. So this typically trades inverse to the euro, all right? Now, there's not much price action there. That's just an outside bar, or basically a large doji. That's a sign of indecision, but you're near a range high. Okay, now with the kind of strength in the euro, obviously the euro is being motivated by something else. So these things aren't moving together right now because in theory, this thing should be pushing lows and it's not. I don't like when things behave like this, when they should be doing something and they're not doing it. So that to me is noise. I would avoid this pair right now. I'd rather take something that makes more sense, like the euro makes sense right now, maybe the Aussie dollar, something where the dollar, because the dollar is weak and that's why you're seeing those things push higher, but the franc is obviously just as weak as the US dollar, right? And that's why you have this conflict going on here. So I would just stay away from this. This is noise. Now, if you clear this resistance up here, this range resistance, which is 97, 95, or basically 98, that's meaningful, right? That's a breakout. That's a bullish breakout, and that would mean that the dollar is getting strong again. So that could mean something that can also be a long. Okay, hopefully if we see something like that, we'll be in before such a move. And if you take out the range low, which is here, at 96.05, that's also meaningful, right? So you're going to need, but the dollar or the franc is going to have to do something dramatic in relation to each other. That makes sense. So for now, as long as those levels are staying, as long as those levels are intact, I would avoid this pair. Okay, I don't like these noisy pairs that do this until there's something more meaningful going on. All right, so that's that. Now, okay, so let me just jump back to ACB real quick, and then I'm going to wrap it up because I got to do this podcast. All right, and we got a bunch of things to talk about on there. So the outside bar. What outside bar? You said there was an outside bar. Well, we had a bullish outside bar. Right, but the thing is, with something like this, right, that could have been a signal, but the problem is ACB has been a garbage stock to begin with. All right, and typically when we see new patterns, especially after we got out, after they had their reverse split and we were not happy with it anymore, we would just take this. We're not going to give this much weight because we're going to say, this thing, we gave this thing a chance and we're not going to really have much faith in such a signal, okay, especially in this position. Now, maybe you could say that's a bias. Maybe you could say that's, we're not looking at it purely from a technical perspective. But like I was saying before, technicals aren't going to help us as much with a stock like this. Okay, this is, like I said, this is a lottery ticket stock. We're just betting on a chance that some news is going to come out along the way and spike it like occurred. So that's why, it's tough to play that on a technical side. Technical stocks are good, stocks that follow the market. Stocks that are showing nice, clear trends and structure and price action. Where this one was just in a bearish trend, it was ugly, so the technical argument wasn't going to help us too much. Okay, so oh great, Michael, Euro, because they are putting up 500 billion support plan. Oh, so they're going to print more money, I guess, or something. Okay, so if you would have seen the outside bullish bar, so Sean, no, the answer is probably not. Even looking back, we probably would not have got involved in something like that because we were not happy with the general performance of the stock to begin with. And it's not like it's a great market stock. They're kind of garbage to begin with. It was a gambling stock. And we probably would not have taken that technical signal as seriously. Maybe we would have mentioned it and said, hey, look, there's an outside bar there. Maybe that'll turn into something. But we probably would not have taken a position because there's so many better stocks out there. I know after the fact, you can say, well, but you missed this huge move. The thing doubled. Well, yeah, we miss moves. So it's just over time, these stocks don't all do this, right? And that's why you can't really rely on something like that. Okay, but now in general, do you ride that momentum? Okay, well, so now if we were in this stock and right now, sure, I would if I was in this stock, I would take some profit off the table and then let this thing give me a reason to sell it. There's no reason to sell right now. It's vertical. So, I want to see it consolidate. Maybe it'll give us a higher low. Who knows, Sean? Maybe it'll give us another reason to get in. It's just not there right now. So at this point, I would just, let it give me a reason to sell. So if you're in it, great, let it run. Okay, but always get in the habit of taking something off the table. It never hurts. Okay. All right, you guys. So I gotta run because I gotta set up the podcast now. Thanks for participating and asking all these great questions. I really like to see that. Thank you for taking the time. So make sure you check out the podcast. All right, our sound should be good this time. All right, I know we've been having sound problems, but our sound should be better. If by any chance our sound is not that good, please tell me in the chat right away. And because, no one wants to listen to a podcast with lousy sound. All right. So thanks, you guys. Have a great day, and I'll see you in the podcast. Okay. Bye. Oh, and by the way, if I didn't answer a question or something, just please ask in the chat and I'll follow up there. All right, everyone. Take care.